Open your banking app right now. Find your savings account. Look at the interest rate they're paying you. 0.01%, 0.05%, maybe 0.5% if you're lucky. Now remember that number, because we're going to come back to it. Your bank is one of the most profitable businesses in the world. JP Morgan, Bank of America, Wells Fargo, billions in profit every single quarter, and almost all of it comes from one place: your money. Here's exactly how it works. You deposit $10,000 into your savings account. The bank takes that money and lends it out to home buyers at 7% interest, to businesses at 9%, to people using credit cards at 22%. The bank collects those returns every month on your money. And what do they pay you for the privilege of using it? 0.01%. On a $10,000 deposit that generates the bank hundreds of dollars per year in interest income, you receive $1. $1. That is not an accident. That is the business model. Now let's talk about what a savings account actually is. Most people think of it as a place where money grows. It doesn't. A savings account is a place where money slowly disappears because of one word most people ignore completely: inflation. Inflation is the rate at which the purchasing power of your money decreases over time. Historically, it runs between 2 and 4% per year, some years higher. If your savings account pays you 0.5% and inflation runs at 3%, you are losing 2.5% of your purchasing power every single year. Not on paper. In reality, the $10,000 you saved 5 years ago buys less today than it did then, even though the number on the screen looks the same. This is called the inflation tax, and it runs silently in the background every single day. Now here's where interest rates come in. When central banks raise interest rates, borrowing becomes more expensive. Mortgages go up, business loans go up, credit cards go up, but your savings account, it barely moves. Banks are extremely fast to raise the rates they charge borrowers and extremely slow to raise the rates they pay savers. That gap between what they charge and what they pay is called the net interest margin, and it is where bank profits come from. In 2023, when the Federal Reserve raised rates to over 5%, high-yield savings accounts were paying 4 to 5%. The average traditional savings account was still paying 0.5%. Same banking system, same deposits, 10 times the difference in return. The only difference was whether the customer knew to ask. So what should you actually do with money sitting in a bank account? First, understand what a bank account is for. It is for liquidity, for transactions, for short-term safety, 3 to 6 months of living expenses, accessible, liquid, safe. That part makes complete sense. Everything above that threshold is a different conversation, because money sitting idle above your emergency fund is not being saved. It is slowly being redistributed from you to the bank through inflation and suppressed interest rates. Second, if you're going to keep cash in a bank, use a high-yield savings account. Not the default account your bank opened for you when you were 18. An account that actually competes for your money. The difference on $20,000 over 5 years between 0.1% and 4.5% is not small. It is thousands of dollars for doing nothing except moving the money to the right account. Third, understand that the bank is not your financial advisor. The bank is a business. Its job is to maximize the spread between what it pays you and what it charges everyone else. Your financial well-being is not part of that equation. No one at your bank is going to call you and say, "Hey, you should probably move this money somewhere it works harder for you." That call will never come, because the money sitting still is exactly what they want. Your bank account is not a financial strategy. It is a starting point. What you do beyond it is what actually determines where you end up. The next video is about debt, specifically the difference between debt that makes you poorer and debt that builds wealth, and why the people who understand that difference think about borrowing in a completely different way than everyone else. If this is starting to make sense, you know where to find us.